Hello traders, this is Brian from FinancialTradingJournal.com and welcome to this week's FX Weekly Analysis. Today is Saturday, June 8th, 2013. So let's get started. Before I start, I just want to say this. For those of you that were watching the markets this week, you probably would have noticed it was a weird week. Midweek on Wednesday, Thursday, we had some really volatile movement. Then Friday was NFP came out, so employment data came out. That was another weird volatile day. So a lot of the technical analysis from last week's analysis was voided this week, and we'll get into that as we go through the pairs. So starting off, we have the dollar CAD. As you guys can see, the monthly bar last month, or last week I should say, I mentioned that the monthly candle closed green and that we were looking for some type of upward movement past the weekly trend line. That didn't happen due to the weird volatility this week, and we went back down. This is a pretty big red bar considering this only took place over 1 week, and over 1 week this is pretty big compared to the previous green candle. This represents probably, I think, around 60%. So we're going to be drawing fib lines once we get down to the 4-hour or daily time frame as well. So zooming into the weekly chart, you can see that we did break back down. I did mention that this might happen and that we might be ranging, but I didn't expect it to actually break the weekly trend line. Although I did draw it on my chart analysis on the website. If you look through the charts, I think I drew an arrow that if it broke the weekly trend line, it would just go right back down. So that did happen. I was hoping for more of a range somewhere in between these two lines here. So that might have happened, but it didn't happen. It just broke back down into the old weekly symmetrical triangle there. Going to the daily chart, what I have drawn here is a bullish flag. As you can see, the flagpole there. Previously, we were in some type of a bullish flag, but that flag had a range over here, so we were hoping for a horizontal flag. This resembles more of a trending flag, which is where you have a flagpole. The flagpole is the same, but how the flag is formed is what dictates what type of trend it might give. A flat one wouldn't give that big of a bounce compared to something like this, because if you think about it, this type of flag shows more of a retrace. So a retrace is always stronger for a trend in the long term, because you go up, then you go down, retrace, and then you have a lightning shape or a stepwise trend line where you go up then down, up then down, up then down. And this is something I mentioned in my general trading series on behalf of Financial Trading School for pattern formations. So this is something that's required for a good trend. So anyways, going back down to the 4-hour chart, what I have drawn here is the fib lines. As I mentioned earlier, this fib line is drawn from the low here up to the high up there. You can see that this week we touched the 61.8 and we bounced off of it, which also coincides with the bottom of this bullish flag. So for this bullish flag to work, it can't really break below this, the lower trend line of the flag. Otherwise that would be voided and we would just have a reversal down. Otherwise we're looking for this level to hold here, somewhere in between here, maybe the intersection of the downward trend line and the 61.8 fib level for a bounce up towards there. That would probably be the best risk reward trade down there somewhere. If it breaks that, then you're going to be trading down here. We're looking for a bounce in the weekly, lower weekly trend line coming up if it does break this area. Otherwise, the best trade for confirmation would be after it breaks the higher trend line of the flag, somewhere up here. But that's actually not that great either, because we have a punctured area up here as well. So that this isn't a perfect flag, like I mentioned, because we were initially aiming for a horizontal flag, but now we have this downward sloping flag. So that's it for the dollar CAD. Moving on, we have the Aussie dollar. Aussie dollar, unlike the dollar CAD, this monthly closed red. So this was one of the weird pairs that it actually went down. So this one, out of all the pairs that I forecasted last week, this one was the only one that actually went down and kind of continued where the mindset of it broke this, the trend line, like this one over here. This one we were hoping that it would continue going down, and this one is in line with the long-term mindset. So that's it for the monthly chart, but you'll notice that we are in no man's land here. Last week I mentioned in between these two magenta lines is no man's land. So this is no trades. Not, it's about this is I think a 200 pip range. So you could be scalping it, but I wouldn't really risk it because it can go either direction in this range here. As soon as it breaks out of this, then that would be the determining factor. But this week, you'll notice that it did go down and go up as well, so it's kind of weird. This area, whole thing is weird. I'd be waiting for sell stops below the support down here and possibly sell orders up here like I mentioned last week. Going on to the weekly chart. Weekly chart, the only thing I want to mention is we are in the 1, 2, 3, 4, 5. So we now have 5 consecutive red candles on the weekly chart. As you look through history, that doesn't happen very often. But if you look at when it broke the last trend line back here, you can see that this one had a considerable number of red candles. So it is possible if we are forming something like this. But during a normal trend like this in the range, it didn't happen that often. Like, see this one, you have 1, 2, 3, 4, and then it green. This one you have 1, 2, 3, 4, 5, green. This one you have 1, 2, 3, 4, green, etc. This one you have 1, 2, 3, 4, 5, 6, 7, 8, and then green, and then it continues red again, 1, 2, 3. So we could be forming something like this over here, something similar here. If we break the 9.4 level, we could potentially do the same thing down there. So that's it for the weekly chart. Next we have the daily chart, which is similar to the dollar CAD, where instead of a bullish flag here, we have a bearish flag. I did not have this drawn last week because that flag was kind of too sharp, because if you notice, the last flag I had something drawn where this high was connecting to down here like this, so it was more continuation of the flag pole as opposed to an actual flag. So this more resembles a flag because a flag has to be wider than a narrow flag. So this is the bearish flag. Yeah, so there's nothing else to say there. H4 chart just zooms in to show a better formation of what the flag looks like. You could be looking at a double bottom here as well. I wouldn't be trading up, so because a flag means that we are expecting it to price to bounce up to here and then possibly bounce down to continue the move. But going long here is a pretty dangerous territory, considering we have this level here. I mean, you could do it, but your risk to reward wouldn't be that great, considering we could just go straight down. But that's all I have to say for the Aussie dollar. Next up, we have the euro dollar. Euro dollar, green monthly candle, so this is in line with the pound dollar and the dollar CAD, but it's opposite to the Aussie dollar, so that's kind of weird. So I think Aussie dollar is the outlier this week. There's nothing much to say on the monthly chart for the euro dollar. Moving on to the weekly chart, you can see that we are still inside of this channel. Price did break above it. It spiked above, but it closed at the levels, so it's indecisive right now. So there's nothing else to say there. I just want to show that it's still inside the channel for the weekly time frame. For a daily time frame, what I have drawn is a fib line showing that we do have a bounce area up here at the 1.3341 level. And I think I mentioned this in previous forecasts. The 1.3341 level is a pretty prominent level historically speaking. Throughout trading for the past 2 years, that level has come up multiple times in my trading. So that's a level to be watching, and that is the 61.8 level for this current level right now for this area. But the problem is, on the daily time frame, we broke outside of the channel, the aqua channel, and we have this red pullback right here. So this, from a technical point of view, you could be trading long to go up here from there. So this would be your pivot point, if you will. It's not the official pivot point, obviously. If you calculate it, it's probably going to be a different value. But in the sense of technical analysis, this is the pivot point, quote unquote, for this week. This line right here. But going long here is kind of weird, considering you have the 61.8 level right above it. So that's kind of a risky trade. I'd be looking for price to go back down. If it does re-enter this aqua line, then it would go right back down to here somewhere, unless it's forming a trend, in which case you would be looking for a bounce. If you connect lows like here to there, you'd be expecting a bounce somewhere over there. So that's it for the daily chart. The 4-hour chart, there's nothing really there. You could be drawing a line like I mentioned. This is what you'd be looking for a bounce. If it comes back inside, it would have to break this trend line before continuing any downward movement, because we do have an upward trend line here. It has to bounce somewhere here, but this is 50 pips away. So 50 pips away, you should be waiting for this level, so that this is your deciding point. So this is the pivot point again, if you will, on a trend line level as opposed to a support resistance level. So that's it for the euro dollar. And lastly, we have the pound dollar. Pound dollar on the monthly chart, what I have drawn, the new lines that I have drawn is this level right here. You can see the weekly trend lines, the magenta trend lines. We are forming a small channel that will become more clear as we zoom in, but that's all we have there. In last week's forecast, I mentioned we could have some upward movement based on the weekly chart and the daily chart, and we are seeing that this week, which is kind of weird. So that's it for the monthly chart. Zooming in, we have the weekly chart. Weekly chart, you can see the channel lines clear. You can see how it bounced off the lows here and the highs there. So I only drew these channel lines after the top formed here, but technically speaking, for those of you with a good eye, this higher trend line up here is parallel to this bottom trend line. So what you could have done was drawn this trend line, created a parallel line, and drew this and predict effectively what the bounce point would have been, which is right there. Parallel lines I found throughout the past 2 years of trading, or 3 years of trading now, that they are pretty useful at times, and in this case it was very useful if you caught the high at 1.567, which is right up here at this level. So that's it for the weekly chart. Moving to the daily chart. So the reason why I left this red line right here was because last week this was the level we were looking at for price to hold, and this is actually one of the trades I took this week that didn't work out. I was trying to short this level. About midweek, I realized that this was also a downward trend line, so this is a double confirmation level type trade, but that didn't work out obviously because it just went straight up, so my stop loss got executed within about 3 hours or something. So that trade didn't work out. So since this downward trend line is broken, this resistance was broken, you'll also notice the 1.56 level, that high that I thought would never be reached, actually was reached this week, and that level also broke. So we made new highs on a higher time frame with the higher lows and higher highs. It could be forming, this uptrend could be valid on a weekly time frame, and it could just continue up. But in the short term, we bounced off the higher trend line, which means it could potentially bounce back down. The only problem with this is we have this red line, which was previously resistance, as support coming up, this downward trend line, which was previously resistance, as support coming up as well. That's a problem. On the 4-hour chart, we also have an upward channel with these trend lines here, the red trend lines. In order to go back down, it has to break a lot of support. It has to break the red trend line, the red support line, and the aqua trend line as well. So it has to break these three for it to continue back down to the weekly trend line level. So that's the end of this week's FX Weekly Analysis. Hope you guys enjoyed it, and I will see you guys next week.